sitting just like this, but I think I was on that side, in Las Vegas just 3 weeks ago, 4 weeks ago. Boy, a lot has changed since. We were at CoinAgenda and talking about, we were just reached the quintuple or sextuple bottom, and it looked like everything was pretty secure around 64, 6,500, and we were talking about how things were going to be going up from here, and then Craig Wright came along. You want to talk about your thoughts on the, really surprised me the amount of panic that has evolved around this fork. Obviously, when you have a guy come out and say, I am Satoshi, and I'm going to dump my 1.1 million coins, it does get a few people's attention.
Yeah, I mean, Craig Wright is interesting from a novelty perspective, but not much more than that. What we are in is a crypto winter, no question about it. And we've seen, you and I have seen a few of these. We've seen Bitcoin, pronounced dead 300-400 times. But when you kind of go
330 as of this morning, it's accelerating.
Yeah. So there's no shortage of that. But going back and kind of thinking about those moments before, the regret analysis, like what I shoulda, coulda, woulda done if I could go back in time. These are the moments to invest and build and hire like never before. If your compass about this space remains intact, which it should, nothing should change that. This is the time to really dig in as deeply as you can, quite frankly, and not necessarily sell your watch and your shoes and your dog and buy more Bitcoin, but it's also for sale these days, and so something to think about.
I always like to quote when you and I were texting back and forth when it hit 300. You said if it goes below 300, you're going to sell the family silverware and back up the truck. So I didn't count the silverware afterwards, but I assume you made some good investments back then. At $300 to even today, $3,700 or wherever it's been in the last hour, still a decent return. But Eric Voorhees, as I had mentioned earlier, had said this is basically the euphoria stage for bears. Oversold? I mean, what other shoe can drop still?
I mean, every time historically Bitcoin goes to an all-time high, whether it's going from 1 to 10 to 100 to 1,000, 10,000, 20,000, there's this invisible hand of Bitcoin, of crypto, that kind of yanks it all back, clears the tourists out, and kind of like makes you question what you're doing sometimes. And so again, the desensitization of some of that is, if you're in this long enough, you have that. For new people, it's a little bit confusing because it kind of like, think about the Thanksgiving Day conversations we had last year. Most people were kind of rock stars going to their family gatherings saying, yeah, I'm in blockchain, Bitcoin, crypto. And today you're kind of like, putting your head down and just saying, pass the cranberry sauce, and we'll talk about another year or two. But this is kind of the dynamic of crypto. It's a roller coaster ride. There's a lot of dynamics happening, and if you separate the price, if you look at what Fidelity is doing, what New York Stock Exchange with Bakkt is doing, some of the biggest institutions in the world, this is a question of like, is it happening? Will it happen? It is absolutely happening. Everybody from an institutional standpoint is trying to figure out how to take a bite of this apple called crypto, and it's harder for them. I mean, we, from a retail standpoint, from a venture standpoint, a little easier. The venture community even had a hard time getting into crypto. They had to change a lot of their LP agreements to say, because you have these excluded assets from oil and gas and real estate and currencies, and they're like, oh, we can't invest in crypto directly, so they started investing in some of the companies, and now every LP agreement of every new venture fund has crypto as a permitted investment. Institutions are going through this.
Is it time for it to be classified as a security in many people's minds?
Yeah, well, I mean, that dynamic, the regulatory clarity is something that we need more and more help with. I mean, if you kind of look back on the brakes that were pushed here in the U.S., that has compressed market value, that has compressed some of the innovation that would have rather stayed here and moved to Singapore and Switzerland. So that dynamic is still in motion. If you're doing a security token, that well-grooved path is available, and people know how to kind of tame that piece. But back to the utility side, And then there's a couple of existential things. Like, I didn't necessarily get into crypto to tokenize a hotel or a bar of gold or a bank account full of fiat. That wasn't like what I was thinking when I got into this space. I was thinking about these digital cooperatives with these tokens, and truly the utility component is where the trillion-dollar layers are, in my mind, going to surface on top of decentralized money. But the STO dynamic over the near term is going to be profound. I think we're going to see a huge Cambrian explosion of that. But there's an issue, and I'll chat through the issue. I'd love to get your thoughts on this. So these tokenized hotels and shopping malls and barrels of oil, everything you can imagine that's a real world asset will find some token attribution to it. And that will help, from a training wheel standpoint, institutions invest in and absorb tokens and stuff that they know and they understand. That's a big deal because most institutions on the distributed computing, distributed storage, all these different layers, it's a foreign concept to them. So the overcurrent of STOs will help this undercurrent of all this other stuff that's getting built out right now. The question I have in STOs, and Bloq is going to be doing an STO next year. There's kind of three parts to that sandwich. There's the advisors raising money. There's the token burnishers doing a particular version of a token, and then there's the exchanges. The advisors will raise money in volume because it'll be new and novel and interesting, and some of the more.
And there'll be broker dealers in the U.S. if it's a security.
Yeah, no, absolutely. Just a well-grooved path, like a private placement. I think the type of token it is isn't as important because I think people use instincts and principles to say which is the best token to use for this. And they'll make a decision, and it might change 2 or 3 times over, and that's easier to handle in these types of systems. So that's part B. Part C on the exchanges, that's the part that I don't have a good handle on. If you build it, will they come? Will institutions plug into these new exchanges of T0 and Open Finance Network and Eris?
The biggest issue right now that has not been resolved because it took years just for the Jobs Act to go through and get rid of the state-by-state blue sky laws, right? But right now, the biggest issue is that and let's parse STOs from tokenized securities. Caitlin Long was also at the last CoinAgenda and did a fireside chat with her, and she basically parses them in that tokenized securities are tokenizing existing security like real estate, right? As opposed to an STO starts and begins its life on the blockchain. It's brand new. We're doing a startup, and we're gonna have it be a security token from day one. And it's interesting. I can't remember who said this, but I read it on a Medium post over the weekend. But I loved it. I'll have to look at it again to source it, to attribute it properly. But they said we're going to go from the era of shit coins to the era of shit securities. and by the way, I would say that. When somebody said that most ICOs are scams, I don't think most ICOs are scams, but I think most of them were bad ideas with bad teams. That doesn't make them illegal. 95% of all of Silicon Valley, Steve can attest from history of being there a long time, are lousy ideas with lousy teams, and they never get past their pre-seed funding. That doesn't make them illegal. A scam and a shitty company, a scam and a shitty coin, a scam and a shitty a real estate play like, hey, I got a real estate token. It's farmland in Nebraska that's overpriced.
Yeah, exactly. I mean, building infrastructure is expensive. You think about railroads, telephony, internet, and they all went through this speculative, effervescent bubble and collapsed. And out the other end, you had, in the case of internet, you had Amazon and Google and others that were able to play off of some of that innovation and overspending, et cetera. But you kind of need that to come out the other end with, the human capital, the IP, and all that other stuff that creates that infrastructure. So same thing is happening here. And
Amazon dropped 97% from its peak to its trough in 2002, and obviously went way up from its $5.50.
It took 5 years to recover from that. So all this stuff is well known, but but the dynamic here is very different. So we think we're in a winter now, and we're seeing this. Everybody's charting this industry like crazy. this is a speed bump. I mean, with the internet, we're talking about, women's shoes and pet food and putting interesting things online as that was going to change the world. This is a completely new internet, completely new money systems.
Well, I'd be interested in your thoughts, since everybody's saying this is going to be the year of the STO. I mean, STOs do have some issues in terms of, to answer your original question, if they're, accredited investor, Reg D, which most of them start out, as Don was saying in the previous panel, you can't go between U.S. and non-U.S. You have to go and be on an ATS, which right now none of them are letting. It's got to be with another accredited investment. It's basically like just being illiquid venture capital, other than a very small amount that are going to go on some of these accredited-only platforms. And maybe that's a good thing. Maybe they're not meant to really trade. Maybe it'll be the new pink sheets. Until you develop an uplist. Here you're going to uplist then to be a Reg A+. There has yet to be a single token that has qualified for Reg A+. And personally, I think the future is going to be not security tokens when it's companies. I think funds and a few other things should be tokenized funds. But just have a normal venture round for the company, and then just simply airdrop the utility tokens and list them on utility or consumption, I think is a better word, token exchanges, because they are really, if they're loyalty points, if they're gaming rewards, if they're things that are legal to list when they're not a token, why should they be illegal to list if they are?
Yeah, I mean, I think the point you made about being on an exchange here in the U.S. and then how do you exchange that if you're in Singapore or in Europe or wherever, that's going to be a part of that staircase of making STOs more worthwhile. The other thing is, most institutions today still have a hard time dealing with getting tokens, whether they're utility or security tokens. And so a lot of them are like, why don't you just hold on to it when the exchanges or when we get our wallet set up, we'll contact you. And so some of that adoption is still in the kind of wet cement stage. It'll get there, but it'll take time.
Well, I think a number of the companies that are coming out now that are doing custody for Bitcoin and for Ethereum, they'll be happy to hold on to your coins, and it's not going to take a T3 to settle them. But they'll be there so that you don't lose the keys or whatever. And the nice thing about security tokens is if you lose the key, no big problem. It's like losing a stock certificate. They'll give you a new one.
Right. Yeah. I mean, so there's not a whole lot of innovation in this space, but I think it will change some of the market structure in terms of how a particular hotel gets valued. I think this zip code of Wall Street will see this tokenization of things, the tokenization of a piece of real estate or a bar of gold, and we'll find a massive fee opportunity. So this zip code is inclined as brokers and investment bankers to do this. So I think everybody is predisposed. They understand the underlying asset, and then the tokens itself, managing them, storing them, custodying them, exchanging them, all those layers, are getting built. They're all measured in weeks and months of age, and so we're in the kind of stone ages of not only crypto but the STO space as well. I'm very pragmatic about this. I mean, I was a founding investor in T0 on the board there, and Masari, which does the data layers, Polymath Network, which does the token burnishing, and I did it just to kind of get a build a perch and a perspective to see this STO evolution. This is about a year and a half ago, when people were just starting to talk about it, and now it's thematically, a thing. Everybody's wants to do them, but we still have a lot of work to do in some of the layers of the space.
And again, this comes down to the regulations. I'll have one more question for Matt, and I'll take some questions. What does 2019 look like for Matt Roszak in the ICO space? I mean, the last year or two, you were traveling all around the world, investing in great companies like Quantum, which is down to $2 now, remarkably. And really we're kind of about the ICO and just sort of dabbling in the STO, and then obviously with Bloq and with Metronome launching some of your own projects. What's 2019 look like for Matt Roszak?
So in Bloq, we have two sides of the house. We have Bloq Enterprise, where we build software and services for some of the biggest companies in the world, both Fortune 50 and Crypto 50. So some of our favorite customers are actually native crypto companies, biggest exchanges and miners. And then on the other side, Bloq Labs, we build new tokenized networks. So we launched a new cryptocurrency called Metronome in June. And we have 4 other projects that we're launching in 2019. Titan, Vesper, Eclipse, and Arch. Arch is actually a real estate, it'll be an STO, it's a real estate financial wrapper for kind of the next gen real estate investment trust. Titan is a new operating system for mining. So I've always wanted to be in the mining space, and it was like every time I want to get in there, it was like trying to catch a falling knife. Like, you know, you get at the wrong moment in time, you get burned, and then if you're on that treadmill, you have to keep investing, finding a smaller geometry on your chip, and the hardware piece was very intensive, and I was taught a long time ago, don't touch hardware, don't you know, stick to software, and so the software layer for the mining space is very disorganized, very disjointed, and so Titan is building a new operating system for miners, existing and kind of for the next gen, all KYC to AML, the very kind of new way to look at.
So it'll be a software product or a token, or?
It'll be a tokenized network, so it'll have pool switching algorithms. It'll be kind of a next gen way to basically plug in a box with blinky lights and extract as much value out of that as possible.
And how's Metronome coming along?
Good. We got listed on Bittrex, Upbit. There's a lot of dynamism on the exchanges. Crypto is down in general, so it's kind of hard to do that. At the same time, we look at it as a great way to educate people about what it is and the fact that it is an autonomous money layer, meaning it's engineered a particular way and nobody could change it. So it's like the DAO but gone well. So launching it with no security issues and having it out in the wild is a proud moment for us.
I'm going to ask one last question, get your opinion on this. So Jay Clayton, you know, famously said to Congress, every ICO I've looked at looks like a security to me, and then he later told Perry Ann Boring that he only looked at the ones that came to him for prosecution. And so all the lawyers that I've met, at least in New York and Washington and San Francisco, at least the majority of them say, yep, ICOs are over, done, there's no such thing as a utility token anymore. And yet, Bittrex, for example, and most of the other U.S. exchanges make you go and get a lawyer to say it's not a security. And so there's a couple of hundred listed that are not security. So, and they all started out as ICO. So which one of them is it?
Well, I mean, it's interesting. 2 weeks ago, I was in D.C. I met with 3 members of Congress, Treasury, the White House, et cetera. So I got a pretty good, I'm in there every now and then kind of getting a pulse reading.
And you're on the board of the chamber too, which...
Yes, serve as chairman of the Chamber of Digital Commerce, largest trade association in the space. We launched a token alliance last year, issued a white paper on utility tokens, on responsible token issuances. The next chapter will be on security tokens. So if you care deeply about the space, you have to care deeply and be thoughtful about the regulation. But DC is getting smarter on our space, and there's a lot of dynamics at play there because, you know, a lot of the whippersnappers in the room and entrepreneurs and builders go and talk to these folks, and one member who is extremely impressive is Warren Davidson from Ohio. He just stood out. He's on the blockchain caucus, and I almost my jaw dropped listening to his comprehension of the space and what he wants to do for our ecosystem. But mind you, there are other players that show up to DC that also have a different narrative, and some of them are the biggest financial institutions in the world, and they want to you know, get their they want to catch up and get their arms around the space and find the right positioning. They all understand it, they all get it. They can't move as fast as many of us in the room. And so there's a lot of things going on in that town to try and find the right balance. If the balance isn't found, I think, you know, there's going to be this interstitial moment, and these things take time to build and go to market and find utility. People, what's amazing in this space, will move to Singapore, will move to Switzerland without blinking. I found that interesting in this space more than any other tech genre I've seen.
With their feet. So my last question, I lied. My last question, Wyoming and states. Does Bitcoin, the ICOs and other tokens have a marijuana play? By that I mean marijuana is absolutely illegal in every inch of the United States under federal law, and yet dozens of states have basically said it's legal here and the feds don't touch them. There are no laws, clear just interpretations saying that it's illegal to do ICOs, and Wyoming went in July and passed a law that says we're going to go and say you're an ICO if you meet this, this, and this, and it's legal here, and the SEC hasn't come after them yet. Colorado's considering the same. If there's 20 or 30 states that basically rubber stamp the Wyoming law, is that a solution?
It's a stepping stone. It builds that narrative, just like you're saying with marijuana or anything else that the states want that the feds haven't approved yet. And so I think it's incredibly additive and incremental to doing that. But at the same time, if you're doing something that rings a lot of bells, crosses lots of lines, you're better off doing it offshore. And I'm telling these members of Congress that we're not doing it to evade taxes. Most people I know want to build stuff here, want to employ people here, but with the lack of clarity, are sitting in the Caymans having ridiculous board meetings because it's safer to do that.
And filing FACTAs all the time. Okay, questions, Steve.
Okay, full disclaimer, I got rid of all my Bitcoin 6 months ago. And you were saying, oh, this is like the trough, and this is a great time to get in. Warren Buffett always says.
The question is, will you ever buy it back?
Well, no.
Oh. Okay.
I won't. And I'll tell you why. Because I look at Bitcoin as Model T. It was a great car when it came out, but it is so far behind in terms of technology. Why would I use it, right? Because the only things I've used Bitcoin for is to make money on holding it. Okay, which is good as when the newbies are coming in. And the second thing is to be able to pay some of the vendors that are cross-border. Well, I can do that with stablecoins right now, and it was fast and easy. Did it with my own stablecoin, and so great. Don't need Bitcoin anymore. And as far as bringing in the newbies, well, that shine is off the car now, and so I don't see what the compelling reason that you or anyone else should buy Bitcoin. Where is the demand coming from?
I think there's a big difference in between a Bitcoin and a stablecoin. I think Bitcoin is it's uncensorable, right? So you could use it without any third party. A stablecoin, moving money cross border. And from an adoption standpoint, it's got the best brand, it's got the best network, it's the most secure network, and I view it as, and some people are like, oh, what is Bitcoin? Is it store of value? Is it payments? Is it machine to machine? Is it all this stuff? My future state of Bitcoin in many ways is that it's going to be a security root for a lot of other things. It's going to have the most security, and it's going to have the biggest network effect to enable other blockchains to be secured by it. Again, back to that root chain. So there's a project called Bloq you should look at that's doing a lot of that. And so it's nuance there. And so, Vitalik wanted to build Ethereum on Bitcoin back in the day. The Bitcoin community was like, no, we're going to stick to this monetary policy and this slow, iterative evolution of Bitcoin. And so he built Ethereum. Other people are layering on Ethereum-like features on top of Bitcoin. So I think over time, and it's hard to see this now, the pizza stack boxes on top of Bitcoin are going to evolve and innovate more. It's just a slow, steady token today that it's hard to see some of that stuff.
There certainly will be for moving money back and forth, stable coins that become globally adopted. But right now, if you're sitting in Argentina or Venezuela and you're trying to get, or Zimbabwe and trying to get money out, with Bitcoin, you can just download a wallet and send somebody your address. With a lot of the stable coins, it's like opening an exchange. You have to fill out KYC. You have to.
Can you build a better Bitcoin today? Probably. It's like, can you engineer a different monetary, different mintage, different mining, all this? Yes. But the network effect of Bitcoin and the next institution coming in is going to use their gateway as Bitcoin into this ecosystem, and that's going to continue to fulfill that particular dynamic. And certain things I agree with you, and other things it's like it's happening already. So.
Questions?
Hey, thanks guys. Great talk. Obviously, a lot of conversations today has been about stablecoins, which all derive their value from, not all, but generally derive their value from things in the real world and old world concepts, whether it's discounted cash flow, whether it's currencies, whether it's whatever it is in the real world. And one of the promises of crypto and the promises of utility tokens in the first place was a different way to provision value and a different way to monetize network effects and to move from an equity model to a utility model where everybody can actually own and contribute and be part of the network. Where are we in the evolution of that? Because I think a lot of, if you're jumping right to the end of that evolution where you can earn money on chain, you can spend money on chain, you can pay rent on chain, you can pay your employees on chain, a lot of the volatility
really early.
floats away from that. So are stablecoins sort of a hack to adoption in a way of getting people on chain?
Training wheels for that, absolutely. Because it's like what I started the point earlier. Like I didn't sign up to tokenize a bank account full of cash. In this case, absolutely. That aligning the shareholder, the employee, the user, the vendors in that particular ecosystem. The way I look at blockchains are these ecosystems are digital cooperatives, and the token is a barometer of the health of that. You contribute something, whether it's storage or whatever, you get something back in that value creation. So absolutely is just early, and so it's very speculative right now in terms of a lot of that dynamic.
I also have a delayed response for Steve's question on why anybody would ever want Bitcoin instead of a stablecoin. Your stablecoin is obviously backed by something. If it's dollars in a bank, the bank can be seized. It could be in a government that shuts down. You're trusting a third party with a stablecoin, whereas you aren't with Bitcoin. That's really, I think, the major.
Stablecoins will evolve. I mean, the cash-backed stablecoin is an interesting one. Again, I kind of smirk because it's fiat. And then
It still depends on the third party, right?
Yeah, no, absolutely. And then there will be crypto-based and then algorithmic-based stablecoins. So I think it's going to evolve, and everybody's trying a lot of different dynamics. And then some of which is like, how do you make money out of the stablecoin? And then it's like, some of the models are all over the place. One of the models people were like, rubbing their hands together on was, we put all this money into a bank account and we basically split the interest with the bank and we just collect interest, and that was the model. I'm like, all the power to you.
That was Tether, basically. That was Tether's model.
Yeah.
Another question?
Thanks, guys, for the interesting topics that we discussed. So you spoke about mining. I'm really interested to know more about your, view of what mining will actually become and its usefulness. We structure a bunch of our products and services around processing transactions. So do you see mining being a critical part of the ecosystem, or just another way to generate coins?
Well, I mean, I look at Bitcoin mining and some of the other proof of work algorithms and tokens out there. It's a thing and will continue to be a thing. There's other proof of stakes networks out there, and was early participant in EOS and love what they're doing. But on the mining side, it's still very inefficient in terms of how they choose a particular pool, the software that could go into the firmware to tune their fan speed up and down depending on the temperature. There's a lot of smarts that miners don't think long term to say, hey, I'm going to build this out. In the abstract, if they were thinking on that 5 or 10 years time frame, they might do this. Today, they're like, well, I'm just going to hack this together. It's easier for me to throw bodies at these issues than necessarily build the software to streamline that. And so a lot of those smarts, we're trying to think through of the 100 paper cuts that miners have. How do you exhaust those? Part one. Part two is there is a whole new community that will come in, meaning I have unused capacity at a university or a government, et cetera. But the mining ecosystem is bizarre. I don't get it. If you give them a KYC to AML, 1099 version of how to participate, plug in their system, tell them what they could have made if they were mining for the last 6 months, what they might be able to make over the next 6 months. It's a little bit of a better, comprehension of what they can do. So that's on the rise.
Yeah, basically, you know, it's version 0.1, right, for Bitcoin. It is to date, according to most of the security experts, proof of work still is the hardest to sort of like completely blow up. And proof of stake have had some things that have blown up. Some of the smaller proof of works have blown up. So there are people trying to take over networks. Bitcoin's never been taken over. Okay, thank you.